Welcome to Massey College. My name is Nathalie Desrosiers and I'm the principal of the college. It's my great privilege to welcome you to another session of the Massey Dialogues, which are designed to have intergenerational discussions on issues of the day. Today, we'll be talking about moving beyond ESG investing towards better impact. And I'm so delighted that we have Anita McGahan, Senior Fellow Anita McGahan, to lead us in this discussion. I want to acknowledge before we start our real duty of stewardship toward the land on which Massey College is built. Massey College is built on Indigenous lands, the lands of the Yonwanda, the Seneca, the Anishinaabe, and the Mississaugas of the Credit. It is the treaty land of the Mississaugas of the Credit. And I want to acknowledge the great privilege that we have to do our work here. So without further ado, I'm going to let Anita take you to our discussion.
Natalie, thank you so much, and thanks everyone for joining. I'm thrilled to have three expert panelists with us today. Let me introduce them in turn. First, we have Inbal Marcovitch. She is a multidisciplinary economist. She leverages the power of research and innovation and collaboration to create positive impact. She holds a Master of Education and a Master of Arts in Economics. She's been leveraging these multidisciplinary approaches to better understand complex systems and to derive meaningful insights to inform action exactly on the topic that we'll be discussing today. Inbal joined the Canadian Public Service 8 years ago as the first economist to establish the economic research portfolio to explore economic, social, and environmental impact of standardization at the Standards Council of Canada. More recently, while serving as special advisor to the CEO of SCC, the Standards Council, she advanced national and international efforts to align market frameworks with a standardization system to achieve ESG, environmental, social, and governance, and sustainability-related outcomes. Welcome, Inbal.
Thank you.
We also are thrilled to have Leting Liu, a PhD candidate at my own college within the university, the Rotman School of Management. She is studying how financial information disclosure affects market participation. Her research and dissertation interests include examining the effectiveness of ESG investing and more broadly, how to shape corporate disclosure for greater accountability and a more sustainable future. She's a junior fellow at Massey College in the office right next to mine. She sits on the Finance and Audit Committee at Massey and co-chairs the Environment Committee. She graduated with degrees in mathematics and accounting from Waterloo and earned her CPA designation while working in the PricewaterhouseCoopers Toronto Asset Management Group. Great to have you here, Leting.
Thanks, Anita.
And then we have Adam Jagelewski. He's a managing partner at TwinRiver Capital. In that role, Adam works with investors and advisors to bring positive social and environmental impact into investment and philanthropic products. He has over a decade of experience in impact investing and co-founded the Mars Center for Impact Investing. He was the executive lead advising private investors and the public sector on impact strategies and investment models. He also hosted Canada's annual Social Finance Forum, one of the most prominent conferences in the field globally. Prior to Mars, he was a management consultant with PricewaterhouseCoopers. He represents Canada on the Global Steering Group for Impact Investing, which is a 30-country leadership table. He frequently speaks at universities, including the U of T. He's involved with boards and networks. He's active with several social impacted ventures, and he has a great sense of humor as well, as he expresses that his hobbies include both magic and golf, and he's trying to figure out how to combine the two. So welcome here, Adam.
Thank you, Anita.
It's wonderful to have you all with us today, and I wanted to begin perhaps by asking you, particularly Adam, if you could just give us an orientation to ESG investing. Can you tell us exactly what it is and how it got started and where it is now, and just give us a sense of what this field it means and involves?
Sure. I'm sure that those logging in are starting to think that, I wonder what ESG is. I wonder what responsible investing is. Now I've heard this term impact investing, and are all these things the same? Are they different? And the answer is yes, they are different. And maybe I can help articulate the differences by sharing a bit of a spectrum. If we think about investing from a traditional point of view, the Milton Friedman view from the 70s, which is, the theory of the firm is to optimize profit at all cost, and investing in such a way is to invest for profit purposes. We have that on the far side of the spectrum. Now, over time, as people have started to become more aware of social challenges, environmental challenges, and the intersection of the capital markets and those issues, new tools, new investment products have been created in order to satisfy those needs. And so we start to get into what we call ESG investing as we move one pillar down that spectrum. ESG investing is really just a set of criteria, environmental, social, and governance criteria that we overlay onto an investment decision. And we decide whether those different risks and variables within that are material. And then we make a decision as to whether or not to invest in that particular investment opportunity. Interestingly, the more that a company reports on their ESG metrics, the better the disclosure is, and the higher the ranking or the rating for that company. But you're still investing in a wide universe of product, and some people, related back to the environment or social, would want to exclude some of those opportunities. So then we get into responsible investing, and responsible investing is excluding typically tobacco, non-renewable resources, guns, weapons, gaming, those what people like to refer to as sin stocks, and they screen those out of the portfolio. Or there's ways of intentionally screening in different types of sectors. The second piece of it is proxy voting, which is using your shares and your ability to vote on certain resolutions within the company as a shareholder, and you can advocate for better policy. That in effect is responsible investing. But if we think about taking it one step further, we come to this notion of impact investing. And the key differentiator in impact investing, which is defined as investing in something that has a measurable social impact and a financial return, is the intentionality around it. You are actively trying to seek out an investment opportunity that's going to be, for lack of a better word, good for the world. And so those three types of responsible or ethical investments are move away from traditional investing, ESG investing, responsible investing, impact investing. And now investors, for probably the first time in the history of investing, have the option to choose where they would like to put their money, just like they choose their cable provider and the different ways in which they view or consume digital content. They're able to do so now, and using their investment checkbooks.
Wow, thank you so much. That was a lot of material and an incredibly clear, framework for us, Adam. Thank you for getting us started in that way. So I wanted to turn to Li Ting, who is working on these issues as a part of her dissertation. It is a little counterintuitive, Li Ting, that we would need this category of investments called responsible investing or called, impact or ESG investing. Shouldn't all investments have this character? Why? The hardest thing in some ways to understand is the stuff that's not responsible investing. How would you add to what Adam has said about how we should understand this?
I think that Adam gave a very comprehensive answer, and I echo a lot of what he said in terms of defining what environmentally and social investing should be. And I think part of the interest in this area is just how murky the definitions around ESG can be. And so if it'll depend on the individual, it'll depend on the culture of a firm as to what they prioritize when it comes to being environmentally friendly or socially conscious. And so that's where a lot of these screening techniques come into play, and trying to classify whether an environmental fund or a social fund is really doing what their mandate says that they will do is difficult and up to interpretation. And so what one company decides they will screen out of their portfolio won't necessarily be what another one decides to do. And at the investor level, different people will disagree with different investment mandates. And so the problem is when it comes to defining what an ESG portfolio should be, there are many opinions, and people would have to do the work to make sure that where their money is going is where they want to be affecting change.
Terrific. Can I ask just two quick follow-up questions just to sort of scope what's going on here? So what portion of all investing is in ESG investing or responsible investing compared to the Milton Friedman alternative?
Right. So it's been growing exponentially. I think it's ballooned to $40 trillion globally of funds that are in ESG investing. And half of that growth happened within the last 5 years, since 2016. And so these numbers are just shocking. And to give an idea of scale, some of the projections show that by 2025, ESG investments will account for pretty much a third of all investment. And that's already seems to be a third in the United States. So,
Wow.
a very sizable section.
Amazing. And 40 trillion is, what is that, about 20-25% of total invested dollars, something like that? So it's scheduled to go up to 35% in the next few years. It's amazing. Amazing. And can you bear with me? I have one other question I just wanted to scope here, which is, are the SIN stocks that Adam mentioned more profitable on average than these ESG stocks, or ESG investments better investments?
Right. And so there's been a lot of concern about the financial returns of ESG conscious funds. Just the idea of factoring in environmental and social considerations and thereby making shareholders' returns less paramount has just been a concern that people are still grappling with. So ESG conversations like ours are often coupled with, well, are we sacrificing stock market returns if we're focusing on these other aspects? And so I try to look to my area of research in accounting and finance. And even there, it's not a clear-cut question, which is why there's been so much attention paid to it. And there is mixed evidence, but I'd like to focus on a couple of the more prominent papers that have come out in contrast to this very loud concern about sacrificing your returns. And one is just published in 2021, and they find no evidence that investing in ESG funds is more costly than comparable non-ESG funds or these SIN stocks. And another paper, which goes back to 2011 by Edmonds, actually showed that a portfolio of the 100 best US employers to work for outperforms their peers on a long run basis. So from my view, it seems like there isn't solid enough evidence to support that ESG funds aren't competitive for all the concerns that exist around that issue, which is just my statistically sound way of saying ESG funds are competitive, it seems. And I think it can be said with more confidence as we move further ahead into the century, and it becomes even more clear that previously ignored externalities do affect financial returns in ways that they didn't a few decades ago.
Thank you very much for that great introduction to this this topic and scoping this for us. I wanted to turn, if you don't mind, to Inbal and reflect together on a point that Liting raised about the marketing of these funds and the ways in which they're presented to the public. And I guess, in a sense, my own enduring question, which is, how come SIN stocks even exist? Why isn't everybody held to a high standard of environmental, social, and governance, excellence? why is ESG as a sort of headline for an investment strategy even necessary? So would you mind giving us your perspective on that? Do you feel like this is a kind of marketing thing, or do you think there's real teeth to this approach?
So I think it's complex. I think I think there are many people who are willing and would like to make a difference in the world and ensure that the way they conduct business is environmentally, socially responsible, and that the organizations that they lead with good governance practices. But why has ESG investing become so widely associated with greenwashing or marketing? And I think I wanted to highlight three areas that I think are important. The first one is history and the organizational design associated with this history. The second is around evidence of impact. And the third is about the market frameworks that we currently have and whether or not they support this type of investment. So the first issue is around history and organizational design. We know that organizational design is a huge area for research for organizations. We know where you place the function makes a difference to the outcomes and the strategy of an organization. So when it comes to ESG, if we look back, Adam shared some really good insights about this origin. I'd like to add another strand of history to ESG investing, and it's corporate social responsibility, CSR. And CSR has been used in the past as a tactic to mitigate public relations risks. And it's been located in many areas in the marketing, communications, public relations functions. So also, anecdotally speaking, when we look currently at ESG functions, they're still not fully integrated into organizations. From the board throughout frontline employees, these functions don't always have the decision-making power that and weight they should have in an organization to make an impact. So, as I said, organizational design makes a difference to strategy and to the message an organization sends to the external, to investors, to consumers, and the external and other stakeholders that have an interest in in its operations.
Mm-hmm.
Within
Please go ahead.
No, the second piece is around a little bit, just to throw a little bit of research. So it's around the data, right? So
sure.
If we look at data in 2020, there was an OECD study that was published, ESG Investing, Environmental Pillar Scoring and Reporting. And they looked to see if there is any correlation between the rating of ESG, around ESG investment, and actual environmental performance. And the evidence just wasn't there. So this highlights a gap. So when there's a gap between claims and outcomes and real outcomes, then this opens up a conversation around, well, what's happening in the middle? And that creates questions. And the last point is really about market frameworks. And I think we're missing the market frameworks to enable the trust to bridge the gap that the OECD study highlighted.
Wow, thank you. Again, it's fascinating here. Let me play back what I think I heard you say, Inbal, in terms of its implications for our conversation, in a kind of perhaps too simplistic sense, but just to really just anchor on the implications of what you said. So I heard you say that you more or less are going down the path that Adam laid out for us as we got started, that there's been an evolution of the field and that the historical evolution of the field is not yet complete. So we have still, corporate social responsibility kind of a little bit tacked on as a sort of afterthought. I think that's too strong, but it's not really driving organizational impact yet. And there's more to do there. The evidence is not there yet that this is delivering, and that we need to enable trust through a different type of marketing of investing, right? Am I saying that right? The bottom line to me, it sounds like you're maybe worried that this isn't delivering yet on the promise of what it is claiming to deliver.
Well, I think so. The last point around trust, it's not about the marketing of it. It's really about the market frameworks. What are the rules? What are the assumptions? What are the foundations that support investment and support claims to disable, opportunities for greenwashing, to enable trust, to ensure that consumers and investors can trust the information that they receive to make the decision that they need to make, and that their investment will indeed create the impact that they desire.
Right. So an example, are you thinking of like corporate knights or something like that? An example of like a rating framework in which a company is sort of assessed for its the veracity of its commitments to ESG?
So there are many different, right. So there are many different frameworks or standards, and the language there, as the other two panelists alluded, there are many language and there's no consistency, which is one of the challenges. There is GRI, there is what used to be the VRF, there's the SASB that are now merging to the ISSB, right? So there are many different players, and there are other frameworks and standards that are trying to help organization disclose on a set of indicators and say, look, here is an agreed upon set of indicators. This is what we're doing about them.
I see.
Now it's yours as an investor. Now it's your decision to make. Or a rating company, this is my profile. And then a rating company looks at that profile and then decides where to or how to rate, how to evaluate that specific company.
Thank you so much. That's fantastic. I wanted to go back to Adam, if that's all right. And what we're hearing, if I understand this correctly, is that this is a kind of complicated space. So we have some challenges here in actually holding companies sort of feet to the fire on whether they're actually walking the talk on really being ESG companies. And Inbal and others are involved in trying to sort of address that challenge and make sure that the funds are really robust in terms of their commitment to ESG. That's a big challenge in and of itself. Let's imagine we were to solve that challenge somehow, and we were to get ESG funds loaded with excitement and funds here. Would they actually drive change in the actual ESG outcomes? In other words, if the investment system of the 20th century created the climate crisis, created the social challenges that we're facing around immigration and inequality and, all these social problems, poverty, and created bad governance, is that same system adjusted to be an ESG orientation going to deliver real solutions to the problems that the system has created?
What a great question. Everybody likes to talk in the financial markets. Everybody likes to talk about returns. What did the fund make? What were the earnings for the company? How much money was made? How much was profit? What were the margins? And in terms of research, there's thousands, hundreds, if not thousands of research reports on the alpha that's generated or potentially generated with ESG funds. I'm sure Li Ting may have that in her database of research, but very few reports on whether or not ESG funds are delivering any social or environmental positive outcomes. And that's the two pieces of the equation here, right? We're talking about financial returns and social or environmental impact. So yes, as the panelists have said, we need common frameworks to measure those outcomes to be able to articulate whether some of these funds are meeting their promises. But to your question about whether these companies are actually going to move the needle on some of these issues, diversity, inclusion, climate, health and well-being, the last 2 years, if that's any evidence, like we're in some serious trouble. And can any one of these companies really, really move the needle? Or any one of these funds, even if the fund is in the billion or double digit billions, is that fund going to really move the needle? Well, I mean, that's to be determined. But what I will say is that I think the system writ large needs to be contemplated. We need to understand what businesses are doing within that system, what governments are doing to enable policy and regulations to improve disclosure, to open up the field for better measurement. We need to be thinking about, as individuals, what we're consuming, how we're consuming, and how we're holding account to those that we're either investing in or we're buying product for. So, it's not so simple as $1 invested is going to reduce greenhouse gas by X amount of dollars. I don't think we can actually say that, but I do think that capital, as one of the inputs in the system, a significant input, can actually influence change. And over time, I'm an optimist. I believe that we can.
That's reassuring that you're an optimist. I'm glad to hear it. Wonderful. So, Liting, Adam mentioned your database and the research you're doing. I'm imagining us sitting at Massey College, back in the dining hall, sitting together with a group of fellows from diverse disciplines, junior fellows from diverse disciplines, and I wanted to ask you, imagine that they're skeptical that the investment system that led to, the climate crisis, that led to large-scale action by corporations that have been, contributing greenhouse gases and have been, engaging in practices that may be associated with inequality or with, other types of social challenges. Is that very system the system that we should use to try to address these problems? And if so, is ESG the right framework for trying to get there?
I think, yeah, that's a great question. I know that there is a lot of skepticism, and it's healthy skepticism among people across all disciplines. I've had these conversations with my fellows at Massey, and I think that we can use the system. There are a lot of issues with it because it is built on trying to achieve financial returns, like Adam had mentioned earlier. That has been the pinnacle of what every corporation needs to strive for as long as I've been able to look back into the literature. And so unfortunately, it is what we have right now. And there are a lot of people that are trying to make changes to the system to move it forward, using ESG to move it closer to where we need to be. And in our talk with Mark Carney earlier in November, we were talking about, well, how do we turn this financial value focused system into something that is prioritizing values that humanity and society actually prioritize. And so I know that ESG has a lot of flaws, but I'm also optimistic in that it can move us in the right direction. I don't think it's the ultimate answer, but we see even with just a marketing ploy, if that's all it is that companies are engaging in, when we look across all ESG investment vehicles from an empirical standpoint, it seems that they are still doing different things than their non-ESG labeled counterpoints or counterparts. They're investing in different companies. Their portfolios are made up of very different corporations that prioritize employee satisfaction, for example. And so when I look at the studies that have been done on this, some are more negative. They show that ESG funds actually invest in companies with lower labor law compliance or lower environmental law compliance. And so that's one aspect that you can use to measure. But then on another hand, another study looked at employee satisfaction and pollution levels. And along those dimensions, ESG funds outperformed their non-ESG counterparts. So it depends on where you're looking, but it seems that this ESG label does come with the responsibility and the pressure to perform somewhat differently than you would otherwise. And some of that is creating positive change for people that find those dimensions meaningful. So I think that skepticism is necessary, but there is change being made, though it's quite slow at the moment.
Thank you, Leting. And when you talk about performance, you're talking about financial returns to investors. You're not talking about the performance of the invested companies in solving ESG problems, right?
Right. So yeah, financial performance, when it comes to that being the pinnacle of what everybody has been striving for a long time, yes. But we do need to expand that idea of performance to include the concepts in ESG.
I mean, when I think about, for example, Engine, the investment fund that transformed the board, was able to drive changes in the board composition at Exxon, if I understand that correctly. If I understand you, what you're saying is, even by removing and using the investment system to remove, cheap capital from some sim stocks, where this ESG movement can have an impact, right? And competing for the dollars of socially conscious investors still has to involve financial returns. But do you share Adam's optimism that we're actually going to get real innovation on climate, real innovation on solving social problems from these ESG companies, as opposed to just better financial returns from, the rich people that can afford to invest in stocks?
I think that is a very difficult commitment for those responsible to be held to in terms of consequences for their actions. And so I think that's where a lot of the focus does need to be, is if you are told that your investments will go towards a particular type of change, monitor that, pay attention to that, and hold those companies accountable. There is a limit to what ESG funds can do. At the end of the day, they only hold a portion of that company's shares, but they should do what they can in their power if that is their mandate. If they are profiting and gaining millions in funding because of their ESG marketing, then hold them to it and make sure that they don't get away with talking the talk without walking the walk.
Amazing. Thank you, Leting. I want to turn to questions from the audience in just a few minutes. So please do add your questions into the chat, and we'll have some time for that. And I'll also be asking each of the panelists to ask questions of each other as well. And as we move there, I want to ask the same question to Inbal, which is, are you optimistic? Do you think that ESG is going to ultimately lead to real solutions to ESG problems, in the field through impact, as opposed to, if we take our focus off, generating competitive financial returns in the investment markets and turn our focus to real solutions to climate problems, to social problems, to governance problems? Are you optimistic that we can complete that process of change that you alluded to?
So I think we're in a really exciting moment in history where there's this window of opportunity that I think if we take it and embrace it, we can find a solution, and we can actually design and redesign or tweak or evolve the system to create the necessary bridges. I think one of the missing pieces or the gaps that I've noticed while working at the Standards Council is that ESG investing is very much, it's about investment. It stays at the financial sector. And what I've noticed is that we need to build a bridge to the quality infrastructure, because at the end of the day, companies have processes, they have management system, they're producing real things. They produce goods and they deliver services. And essentially, if these goods and services are not do not take into account environmental and social elements, and are not, overall are not governed, their production and operations are not governed in a particular way, why should we expect to see results? So I think I see a huge opportunity to connect all the work and experimentation and iteration that has been going on. There's been a lot of energy globally around trying to get it right, because we don't have a lot of time, according to the IPCC report. If we can connect all that work and really take a growth mindset and think, okay, these are the systems and components we have in place. How can we link and build bridges and tweak where we need to and innovate where we need to do, but not reinvent the wheel, use the tools we know, like the quality infrastructure that makes sure that our water is safe for drinking, and that all of our devices are connected, and that we can do the webinar and the session today electronically seamlessly. There's a whole system to support that. So if we can connect that to how organizations are building, I think we have an opportunity to scale up impact in a way that we haven't even imagined.
So am I understanding that you are optimistic, but you see the governance part of ESG as sort of the linchpin for getting real action to happen, real change to happen?
I think we have to be optimistic.
Uh-huh.
I think we have to keep being optimistic, but also realistic, and be very much aware of the reports that we're seeing, and looking at, scientific evidence that suggests that we don't have a lot of time. So with being optimistic, I'm also conscious, and I'm seeing, and I'm looking at the data, and I'm looking at the results, and I'm seeing that so far we've experimented tons. We've gained lots of knowledge on what works and what isn't working, and I think now it's a time to create the bridges and leverage internationally recognized best practices to inform and really scale up the impact.
Well, thank you. Let me turn to each of our panelists in turn. First Adam, then Liting, then Inbal, and ask you what we haven't yet discussed that we should talk about, that we should be thinking about. Maybe can I turn to you first, Adam?
Sure. I think a lot of people that are listening and are following the financial markets are retail investors. They make investments themselves. We're not talking about the big Canada pension fund or teachers. We're talking about individuals. And I guess one thing that we haven't talked about is what choice, what optionalities do individuals have in managing their own portfolios, and how does that equate to ESG, and how can a little tiny, in the whole grand scheme of things, investors make a difference?
And what's the answer to that question? That sounds like a really important question.
If I can jump in.
Do you want me to answer my own question?
How about we'll turn to Inbal?
Yeah, I think if we expand the definition of investor to consumers are investors, the people who are paying into the pension funds are investors, and there are ways for them to influence. And of course, now with different fintech and innovations like Wealthsimple and other platforms that exist, I think there's more. These tools are more accessible. Again, I think what's missing to make a difference is the trust, the assurance that when you, as an investor, in whatever position you are or type of investor, the assurance that the data that is reported and disclosed is actually tied to actual processes, operations, and procedures and management systems within organizations. I'll give you a really good example. One of the indicators that you can find on different frameworks is the percentage of women on boards. It's part of diversity and inclusion. So organizations disclose the percentage of women on boards. That's great. We know there is lots of research indicates it's a good indicator. But is it enough? Is it sufficient? Now, last year, for example, ISO, the International Standardization Organization, published a standard on a management system of diversity and inclusion, and it provides a full picture of what are the considerations that organizations need to consider in relation to diversity, inclusion, and equity within organizations. So, as an investor or as a board member, if you want to look at this particular topic, if there was an organization that was able to demonstrate their performance to a standard and demonstrate that all of their operations went through this rigorous process and their whole system is designed according to best practices, internationally recognized best practices on diversity and inclusion. You've got that company versus a company that says I have this percentage of women on boards. As a socially responsible or an ESG investor, which company would you choose?
Yeah.
Right? So I think we need to integrate these tools together. We need to build the bridges and connect the dots so that investors will be empowered and have knowledge and data and information that they can trust that actually demonstrate the performance on the things that they care about.
So
Adam,
do
please.
it yourself. Yeah, do it yourself platforms are increasing. You mentioned Wealthsimple. There's a few others out there, and I do agree that making that information better will generally help. But a lot of people are timid or kind of afraid to make their own financial decisions when it comes to investing, and they rely on product from typically our big five banks. And those products, not everybody understands like what's under the hood. Just like you go to the grocery store and you're trying to determine what bread to eat or what soup to buy. You look at the label and you kind of understand, but many people don't look at the label of what's inside these mutual funds or EFTs. And when you do look under the hood of these ESG products, you would be very, very surprised at what the holdings are. And if you're thinking that you're aligning your values or investing with your passions, I think you should probably think again, because I'm not sure you would be standing behind some of the companies that are at the top of those holding lists.
I mean, we've talked about how even just getting money out of some of the sin stocks may be a valuable impact of ESG investing, using that term to describe the whole gamut of the whole range of different types of investments that Adam got us started by describing here. But the hard work of making ESG investing really meaningful is, do you agree that disclosure primarily is going to be sufficient? I mean, Li-Ting, your bio, your PhD is on disclosure. Is disclosure going to be enough to be able to, disclosure to investors going to be enough to really get meaningful innovation on environment, on social, through these investment funds?
Right. And in that respect, I think it's a very exciting time to be in accounting research because I do think, and I have to think in my profession, that information is power. And so in the past, especially with the amount of uncertainty there's been in how we go about providing guidelines to ESG companies or penalizing those that don't follow through with their ESG promises, a lot of companies have been able to skate under scrutiny, and they're able to do that because they haven't been held accountable in having to disclose what it is that they invest in a very digestible manner. And not just what they invest in, but there are a lot of businesses that need to start disclosing more of their practices. And so information does go a long way. And as people begin to care more and more about these environmental and social and systemic issues, I believe that they will use and leverage that information to make better choices. And without that information, the opaqueness that companies are operating in will definitely work against these changes that we're trying to make as a society. So I don't think it's the ultimate answer, but I do think information is necessary, and disclosure by the TCFD and all of these exciting new standard boards and policy makers will make a meaningful difference in the near future.
Thank you. So we've got, if I hear you right, we've got shining a light through information and improved disclosure, illuminating what's under the hood in terms of practices in sin stocks or companies that are not aligned with these principles. We've got investors having to elbow through some, I don't want to call it marketing sort of approaches by, let me follow Inbal's language. We've got marketing frameworks that are still legit in investing that that enable ESG branding on investments that are not necessarily truly ESG oriented to the maximum extent possible, if I sort of hearing what Adam said. And then we've got the dissemination of really great ESG practices that can be enabled by disclosure, such as what Inbal described on gender, right? Where firms can learn from each other about best practices. So all of that, I guess, I see the optimism. I see the case for the optimism. Let me again do a round robin here and just ask you, if there's one thing that you could change about ESG investing, what would it be? If there's one new principle that you could introduce, or one new way of channeling resources that you could enable, what would it be? Let me go back to you, Liting, to start us on that one.
If there's one thing that could change around ESG investing, I think it has to be the umbrella effect of marking one thing as ESG and allowing ourselves as individual investors to fall for that simple title. There currently isn't very much going on around holding those companies to a standard if they were to call themselves as such. And this goes back to what Adam and Inbal were talking about earlier, but I think it deserves being driven home. Decide what it is that you believe needs to change and what you prioritize as an investor, as an investment vehicle, and use that to guide where your money will go towards. Because anyone can say ESG, anyone can say a general do good mandate, but find the ones that are specific to what really matters and to you, and try to focus there.
Thank you so much. Inbal.
Well, I think I truly believe that linking the ESG investment world to the global and national standardization system would be, extremely beneficial. I think more transparency, more consistency. We haven't mentioned third-party accreditation, so the idea of validation and conformity assessment to ensure that what is disclosed is indeed what actually performed. And essentially, I think it's about taking responsibilities and being accountable as leaders of organizations to the impact that that the organizations, whether they're for-profit or non-profit, that they make
Thank you very much. And Adam.
If I was to change anything in ESG, it would be around intentionality. There needs to be better intentionality. There needs to be a link between the companies that claim, or the investors that claim to be ESG investors or businesses, and the actual outcomes on a social or environmental change that are being delivered. And we just need a better link. There needs to be a better way to measure that and to hold people accountable. I'll link it back to my previous comment. I think what's under the hood of some of these products is not what you would expect and not what you would hope for if you think that you're being an investor that's better, that has better values than the next person. So that's how I would change things up.
Well, terrific. So you're all optimistic, but you all are expressing a pretty ambitious agenda for doubling down on what ESG can deliver. Thank you very much to our panelists, Inbal Marcovitch, Leting Liu, and Adam Jagelewski for our conversation today on the Massey Dialogue on moving beyond ESG investing to real impact. Thanks to our host, Nathalie Desrosiers. Just a reminder, please join us at 7:45 for the Music Salon tonight through the YouTube link that's on the event page. Thank you all for joining us, and best wishes for the new year.
Thank you.
Thank you.
Thank you.